Welcome back. It's the Crypto Sniper. Yes, glad to be getting back to you on the key markets, the market that we love. We're going to be talking about precious metals. Precious metals also as a potential currency. It's real money, guys. The difference is it's real money that can't be printed or proliferated. Yes, a little bit of a sidebar. While you all hit the puppy licks button right now, so to a number of people, it appears that we could indeed be shadow banned. I would like you to hit the like button. And when you're doing the like button, go now to the bell notification, click on the bell and check it says always. Check it says always. We used to get much higher numbers on live streaming. Google used to give, if you were streaming, it was awesome. And we've seen those really dive. I know some people are hurt. It could be the market, but we want to make sure that that's not happening. Tell you a funny story. Do you know what this perverse little bump over there is on my arm? I'll get a little bit closer. It is called a repetitive strain injury. Do you see that? It's kind of weird. That is potentially caused by hitting the buy button on your precious metals. Ding, 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 ding. Repetitive strain injury. But in actual fact, the true cause is probably me clenching onto my motorcycle riding on bad roads. Why would I bother to tell you that? It's all fine. I'm going to get it cut out. But you should be practicing your buy button for the precious metals. So here's what's happened. What is the chart we're seeing? Let's have a look at the chart. What is the chart we're seeing? Guess what? It's not a precious metal. It is, in fact, the de facto industry standard of fiat proliferation currency, which is the dollar index, which measures, let's remember what this measures, guys. It measures the dollar against 57% the euro, 57% the euro, then 13% the Japanese yen. Whoa, we got some stinky little nappy babies in there, haven't we? Yes, we got a bedwetter and cereal crapper in the euro that doesn't stop defecating in its little nappy. And then we've got our teensy weensy little sulky Japanesey friend, squeezy Japanesey, and he is already almost like an elderly person in one of those ill-continence nappies because of the demographic age group. These are two heavily indebted currencies. In fact, we're going to be talking about that. I will show you the Beauty Queen Parade. And I will be doing tomorrow an FX video, how you can get crypto-like gains trading FX. And the difference is you will be able to have tight stops, and you'll be able to get even more leverage, but you've got to be real careful with leverage, bear in mind. But you'll be able to get crypto-like gains in the FX markets coming soon. And I will be doing that for tomorrow. So know, if you haven't hit the always button, you're going to hit one of the best videos. I'm going to do a beauty parade for you, and you're going to get a sneak peek today, coming up right now. So why are we looking at the dollar index when we want to talk about precious metals? Why do we do it? The reason is, we said to you that the bull market in the dollar versus the euro is a headwind for crypto and also for precious metals to some degree when there aren't other drivers. Remember, there's lots of forces. Flipping moment will come, and we've had little spells on precious metals already. But what did we say about the dollar index? We said to you the dollar index will run from these levels over here. And this is more a currency statement than almost a precious metal statement. Let's put it in our favorite TG Pink. Yep. Psycho Bunny says, TG. During that period, the euro and the yen will be as the biggest constituents, 72% of the dollar index. The euro at 57% and the yen at 13, the pound showing up at around 11, will be. Between those three, you've got almost 80% of the other measures. You've got a little bit of Swiss franc, a little bit of Canadian dollar, etc., but largely Western currencies. It's a beauty parade of Westerners, but there's actually some beauties from the other lands. Fancy a little Russian beauty. And we are also not in it. Of course, Canada is the only one. Look at that move. During that period, it has been a little bit of a lean on the combination of Bitcoin as the anti-inflammatory, and more importantly, what we're talking about today, the gold and silver markets. It's been a lean. Exceeded, what did we get? Essentially 100.5 at the very highest moment, round about there. 100.5, as you can see. And now this is a material reversal. So what's going to happen is that Bitcoin, who was puking on this blow-off up move to run the 100, is probably going to get a bit of a bid. But precious metals were actually holding up a lot better, and now they've had a little bit of a push up. So the dollar is actually giving up ground, and the euro for now is going to get a little bit of a rest. Remember, we warned you, get short the euro USD, get short the yen against the dollar. Also, the Aussie yen we spoke about, commodity currencies versus debt currencies. Let's have a look at that while we're talking about it, because I want you to think about precious metals as a currency, virtually cash. But unlike cash, it's not just pieces of paper that can be printed and proliferated. And unlike money in your bank, it can't be hacked and taken away. It is real, convertible into cash, liquid, near liquid, money that can't be printed or proliferated. So let's have a look at that world of FX and cash. So here we have it. Let's clean the face a little bit and show you this, what we've drawn for you over here. And I want to talk about this upper session, this box in here. So just work with me here. This is where we're looking. Divert your eyes. This is your beauty queen spectrum. And at the very arse end, the transgender, very male-looking beauty queen with the red lipstick and the mincing hairy arse that is giving you the eye, is the Japanese yen. And what do you get with that? You get high relative debt. Now, if you've ever done visualizing debt drawings, and here's one for you right here. The one right in the middle, in there, is your big pal, the squeezy Japanesey. Very, very indebted. So you also have Cyprus, France, Spain, Portugal, all at the 130s, round about where the US are. So they're pretty ugly on the debt front too. So don't forget that. But the leader in ugliness with higher relative debt is Japan. Now, by the way, in terms of the US, it's getting away with a light ride on that 130%. Because the truth of the matter is lots of balance and spent it. There's no little pots waiting for the pension. You will think future people will pay this massive boomer demographic that won't die even when we poison them with, the next generation to support this number of elderlies. So you should actually have a higher number for the US in terms of relative debt, because a lot of things are not on balance sheet items. Who imports commodities or energies? Well, guess what? Japan is scoring another very low mark. Their energies are imported, needed to come in. Unclear or low gold holdings. Well, you can add Britain to the low gold holdings, thanks to opinion, and it will probably go 30, 40, 50x. So that truly was unloading the family silver at the worst possible moment. I wonder whose name got put on the clipboard instead of the British people that got shafted their owned assets, being just metals. Oh, we're one of the biggest in the world. Really? When last did you audit that? Really? Why are you sending fake bars to China when you needed to send them back? Why are you sending fake bars to Germany? If you have so much gold and you're repaying what you owe, why is there so much chicanery, so much mischief? Why can't anybody talk about it with you? Well, I'm not too sure why. You can have a guess, but normally when things are clear, they should be pretty damn clear, and people should be able to verify and ratify that. So make of it what you will, but I would say America falls in the category of unclear on real estate, transgender, dressed in a D-cup bra, winking at you with the hairy legs. That one is saying to you that we do yield curve control. Now, you see, the thing with yield curve control, that means our debt is good debt. We're good for it. So what do they do to keep the interest rates low, because they can't afford to pay high interest rates? They buy the debt to create fake demand for their Ponzi scheme that should be allowed to collapse. That, my friend, is the truth behind what yield control is. Manipulation of the ration and the extension of life of a zombie Ponzi scheme. Why? Because they need you to see it as still stable and that they'll do anything to keep it stable so you'll still buy it because it's good. They don't want to do anything of the sort. They're going to be the buyer of last resort to keep rates low and to create a fake bid under the debt markets that they've created. Yield curve control. Guess who's contemplating? Tools. My favorite phrase, tools. We have tools, says the Federal Reserve and the ECB, you see. The ECB doesn't like this inflation that is showing what absolute garbage custodians they have been for this fiat that is the euro that looks so weak and so, let's just say, impotent, shall we? And probably the second ugliest in this beauty parade that we're currently looking at. They are contemplating yield control. They are contemplating yield control. And what does that mean? They are contemplating holding up their debt markets. Soon, the toxic bankers and the central bankers I'm talking about will use your money to buy toxic, worthless items at an artificially inflated price in a runaway inflation environment where the interest rate should be significantly higher. Germany, last time they were at this levels of inflation in the 70s, had 11%. I'm going to keep telling people that. 11% when they were last in the sevens for inflation. That was the governing interest rate of the time. What is it today? Bang! Decades gone by measures. They are 11% behind the curve. That's if you accept their version of what the true inflation rate is. Knowing that every central bank, every Bureau of Statistics, every retailer has been coerced into a shrinkflation game, definitely disguised or definitely designed to disguise the real inflation rate, as per why Shadow Stats in America gets over 16% on their own governmental rate that was calculated as per the Ronald Reagan level, and they only find 8.5% of inflation in the US. Isn't that cunning? That is chicanery. Lies, damn lies, and statistics, my friends. So that is the ugly end of the curve. What do you get? What do you get at the other end? The strength, or let's just say the virility and the curve. These beautiful babes have narrow waists, juicy, voluptuous bust lines, and are as fertile little fillies as can be, and they sit with low relative debt. They export the booming market that is commodities, and I'm mentioning energy specifically in there as well as one of the things that have absolutely rocketed in percentage terms, and they have gold holdings or even producers of gold. And that would be someone like, wait for it, the ruble, 18% debt. That's right, visualization of the state of the economy. Have a look at that fella, 18%. That is not very much. Russia is in at 18%. I'm not even sure it's on this diagram. Did it make it? Did it make it? Would be one of the smallest. They only start here at Panama, 62. So Russia is not on this 18% debt. And guess what? As that oil price goes up, as their asset base is increasing in buying value, gas is ripping, my friends. As oil is pulling back, gas is absolutely ripping, and they're not currently making additional profit on oil now, they're now making on the gas market, and prodigious buyers of the said bullion. That is it. That is very, very good. And in terms of that, I would put the Australian dollar, the CAD more that way, and even China, which has a debt problem, has a real estate bubble problem, but according to the actual statistics, not as bad, allegedly, as America, but it depends where you look. And let's be frank, who knows? But they are mopping up. They've done a real let the property guys suffer, and they've turned the heat up and they've not stepped in near as fast. They've almost done their own 2008 2009 minus the QE during this period. They created all the heat in the economy globally from the 2009 level when there was no economic activity in the world. Everyone was doom-laden. China was buying up all of Australia's commodities, and that kept up the Aussie dollar during that period. So that is why Australia tiptoed through the GFC a lot easier than Europe did. Anyway, so ruble, Aussie, CAD, at least they have gold, energies, and commodities, and relatively moderately high debt to extremely high, but not as high as Japan, for example. So that is your beauty queen curve of the fiat currencies. And right at the end of it, that never has any debt at all and is 100% gold and will still be 100% gold or silver or palladium or even copper for that matter, industrial metals, precious metals, the commodity itself. The commodity itself. So when you ask, which is my favorite currency for holding money, I will say to you, the yellow ones. The yellow ones. But you say, but, no fair. It's not in a bank account. You can't send it around. It absolutely is. We have great connections via our Reset. Remember, Reset Sniper on Odyssey. Don't forget our channel. Go Reset aspects. It's not what you make, it's also what you keep. And we have Trustful, not more than a kilometer away from where I stand. I can go and have a coffee with people who live in a protected area, that have armored cars, a fallback plan that could see ships take your bullion away from where it is, unbelievable smoke and cameras and heat sensors and vibration sensors, all protecting your precious metals, not a bank vaulting service, not on any governmental grid, not holding any political sensitive people, all in holding with the option as well for safety deposit box holding. And I will still say on top of that, you should hold 15 to 20% right where you know it is. Some back street gardening, some back garden gardening as well. So you have a spread of these forms, and that way you keep that cash safe. By the way, if I have gold and silver in the UK and I want to consolidate it somewhere else because I'm no longer there, there will be people within our community that are UK based that will take that off you, provide funds, and you could potentially purchase wherever your new locale is. Remember, in these times, guys, you need to be able to be mobile. Precious metals doesn't travel well, it's heavy, and you have restrictions on value. And of course, the fiat value, $10,000 was a lot a long time ago. Nowadays, that's next to nothing. You don't want to land in a new country with that in your bank. So the best way is to do bullion swaps. These sort of things are very, very useful for any of you that are planning on changing your home base. Maybe you didn't like, maybe your president or prime minister is someone by the name of Trudeau. Boy, are we getting Canadians that have had enough of what's going on out there. And Australians. Oh boy, oh boy. So let's have a look at your comments. We will read your comments. We always do. And we will kill and stamp on the spammers. Beware of them, by the way. We will never contact you to do anything in the comment sections. The only way you engage with us is the marketsniper.com website. Go and read, review, and choose, and book a call. It costs absolutely nothing. Let's be clear. Even if you don't have the money, book a call and find out what it's all about. Have a chat, a friendly chat. There's no obligation. We've never force-sold anybody. We don't even try. It's a community of the willing. By the way, there are lower product options where you can start learning HVF method and what we do in advance, and later upgrade where you can still get part of what you invested credited towards that. All that can be found out and discussed when you book a call at themarketsniper.com. Let's have a look at the charts and silver, because this is all about why it's been so good. So we spoke about a falling wedge inside the community a while ago. So let's get to the silver and gold charts. Down, down, down we go. And here he comes. Let's start with our friend the gold. And let's clean our face a little bit and have a look at him. So this was clearly showing hammers. Let's also get a bit more history on here. And actually we've got to remind everybody that we were incorrect. We were unduly bearish during this phase. Although our skepticism was justified on Bitcoin, where it had a run and then smashed back down. It has not been the case for precious metals. This has turned into a great upside move. This is a very strong high, but thankfully not higher than that. There's a reason why we like that to start, because we prefer to stop just before and to pull back, rest, and go with momentum and smash it. The last thing we want is a marginally higher high. So this has been good price behavior since this moment here, and this was your clear level 1850 that you were breaking, and your stop should have been there. So this was a key move, and it was a move to the upside, and it is a divergence from supposedly the digital gold realm, which has actually had a very bad time during the 69k fall off all the way down to 32 odd, and is still in and around the 40k 41k level. Now my favorite right now, by the way, I'll just show you on a shorter time frame. We saw a little bit of hammering here, for example. We were watching that on a lower time frame, never made that target, kept hammering, not interested in going further. So when you have a setup that is there possibly for going lower and then subsequently doesn't, you see that little bit of pop, 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 pop. That's why we drew this level. A very good number overall for gold. Sweet memories indeed. And that is where we kind of are with it. So let's have a look at silver. So silver, down, down, down. And that's our splitter. And this was a nice, clear, very distinctive break. Now, this is the silver against the dollar. But who's our favorite ugly right now? Now, you could possibly get a silver versus the yen trade. I think the yen is the ugly of ugliest, but it's lost so much value recently. I think it's going to have a pullback. I also think the euro is going to have a little bit of a pullback. As you're seeing the Dixie cool off a little bit and come down, so we're getting a little bit of a bounce of the euro. I'll do more of that FX analysis, how you can make crypto-like gains trading the FX. Don't forget the September last year. Don't miss the next one. And we'll reiterate a number of things on that. It'll be tomorrow on this channel. Don't forget about it. And make sure you hit right now, always notify me. So this little move is very, very positive. But I want to highlight silver against the euro. You can get up to 100x and you can manage small balances, fairly small balances as well on that. European by nature and secure. You're not dealing with the local broker in the city of Lagos, but at the same time outside of the EU's restrictions on leverage. So a cunning workaround. Remember, leverage is a double-edged sword. So you've got to be accurate when you go in. And I wouldn't say whale in now. Bigger time frame and reassert. And our community has been discussing and focusing on this one for a bit. And we keep reminding the guys that good things should be coming. And we'll also be taking a look at the stocks. Finally, the precious metal stocks are starting to respond as well. This is what we have for you on the gold, silver, euro, my apologies, XAGEUR. So we are exploiting the expected weakness on the euro to get additional gains. So if you are a dollar-based person, you're in America, you might be a Canadian dollar, you're in Canada, you might be a Brit and on pounds, you can get a little bit of extra boost in performance on that weakness of the euro that we see. However, the euro is probably going to have a wee rally right now because it's very close to lows in the same way the dollar index is having a pullback. But we expect 110 on the dollar index after that pullback has played out. This is going to point to a major European crash. Guys, we are big bears Euroland. We haven't changed our tune. We've been consistent and it keeps on puppy licking our face. If you haven't already hit the lick button on this live stream, go and lick our face if the euro has gone nothing but down since 117, 118 when we said get short the euro on a head and shoulders, 9 months away. And we gave you 6 months away the top 6 macro trades on this channel. And you can get further crypto-like gains watching the video that will come out tomorrow that I will do. It will not be a live stream. Let's see some comments before I go a little bit further and then we'll dive deeper into this silver euro. BTC Thriller Spiller says, think too mucho. Harvinder Baines, everything going up. Harvinder, commodities are the new wave. Yes, this is a long commodity cycle. It's a macro long commodity cycle. It is the inflationists. They are utilizing, and this is the key point I mentioned on Odyssey, and I absolutely hammered home. The policy of inflation enriches the billionaire, insider, dark state classes immensely and impoverishes the middle and poor classes immensely. It is absolutely designed to hollow out the middle and flatten that Gini curve where the bulk of the wealth sits in a very small number of hands, and to crush everybody else and turn you into future UBI serfs with destroyed pension pots, stuffed with debt that is valueless and is losing money every month, valued in a fiat that's losing value every month, paying a ridiculously low yield in an inflationary environment where you're facing double-digit devaluation. So that by the time those $1 million that you thought you would have as a lump sum that would mean so much actually arrives for your pension, that $1 million paying you an income will be so low, you'll have a pittance and you will live a poor, miserable existence, complying with state for handouts. Do not be there. I'm here to help you not be that guy. You have to listen. I'm non-advisory. We will entertain. This is an entertainment channel, but you can get a great deal from it. And if you value that, hit the like button and give us a share as well. So back to the silver euro, close to the doorstep for $30 coming, and it will be bullish across all currencies, but we see it there. This has been beautiful price behavior. This was the one we didn't like too much initially, but in the end walked out to the upside. Why did it kind of hard? It got harder the deeper you got into the pattern. But you know who saved it and pushed it out that side instead of the downside? Our friend Jay Powell. He said, we are almost 8% behind in inflation on their numbers, which is 16% in real numbers. And he said, we'll do 1/4 point